And from the world of business, a major fraud has rocked global investment giant BlackRock that involves an Indian origin executive. Now, the alleged scam is pegged at over $500 million and has sent ripples across the private credit sector too. The case centers on Bankim Brahmbhatt, a telecom services CEO who led a network of companies in the US and abroad. According to a lawsuit that's been filed in August in the US, the lenders claim that the companies linked to Brahmbhatt owe more than $500 million. The alleged fraud is Brahmbhatt's firms fabricated invoices and accounts receivable and even used them as collaterals for large loans. In other words, the assets on paper did not reflect real business activity that was done. The lending arm of BlackRock's private credit business, via its purchase of HPS Investment Partners, started lending to Brahmbhatt-linked firms in September 2020. The total investment surged to as much as $500 million this year, after rising to roughly $430 million last year in August from around $385 million in 2021. One of the large lenders involved was BNP Paribas. The lender reportedly financed nearly half of the loans. The fraud came to light in July this year after a staffer at HPS noticed many discrepancies. The HPS employee found that many customer email addresses provided for invoice verification came from fake or even forged domains. Follow-up investigations found that every customer email was used over the last 2 years by Brahmbhatt's firms was fraudulent. Some forged contracts allegedly date back to 2018 as well. Lenders now say that Brahmbhatt has reportedly ignored calls and a visit to his listed office in New York was locked and deserted. Tenants nearby confirmed no staff had entered or left the office in recent weeks. The lawsuit states that Brahmbhatt created an elaborate balance sheet of assets that existed only on paper and that some assets were moved offshore to India and Mauritius.